For more on the markets, let's bring in Jay Woods, Freedom Capital Markets Chief Global Strategist. And what I can't believe, when you started this in 95?
What's that?
When did Freedom Capital Markets, when was that founded?
Freedom, the U.S. operation was founded about 5 years ago. We're public here at the NASDAQ.
And Freedom wasn't taken? For a name, Freedom Capital Markets was not taken.
No, it's a great name, and no, it hasn't been taken.
What do you mean it started here? Where was it first?
Well, we're a global brand. We're all
yeah, but the Freedom really is best here in this country.
Well,
isn't it? It was somewhere else before it was here.
I agree.
That they're imposters.
Yeah, well, they're great people.
Okay, just saying.
It's the Mel Gibson movie. Freedom.
That's right.
Scotland.
Right. That's right. That was Scotland.
Braveheart.
Well, they were trying to, fighting for it. NVIDIA, tech, it's really gotten ahead of itself. You think it peaks in the summer, but it's not over.
I do. I definitely think we're a little out over our skis. We're going into a major rebalance on Friday with the XLK, and we've had this great subway race. You go to Yankee Stadium, you get that drink for entertainment. We're seeing it here in market cap. You know, first Apple led, then it was Microsoft, then NVIDIA, and that's changing how people are restructuring their portfolios, and we're seeing a lot of euphoria. But from a technical point of view, they are well above major moving averages, and after a while you're going to pause, and that's what I think we're about to see. And I think the crescendo is going to be not just the rebalancing today, tomorrow, but also the Russell reconstitution. So you're going to have big volume events, and then people are coming to the second half of the year. They have to rebalance their portfolio, and when they notice that NVIDIA makes up a much larger percentage than it did originally, they're going to have to cut back. So I think a pause, given the great run we've had, is just a normal routine thing. We saw NVIDIA correct 20% at one point and go nowhere for 5 months last year, and I think now's the time, if you have profits, to book them.
With the Dow lagging, and really with everything lagging, I mean, the NASDAQ almost, the S&P's doing well as well. Tom Lee is looking good, but
same stocks in the S&P there.
The NASDAQ looks like it's almost a still. There's an article, I guess, that's out there that it does at least rhyme with the late 90s.
It has that feel to it,
but
definitely.
Not valuation-wise.
Not valuation-wise, not at all, especially with NVIDIA. The earnings growth is tremendous, and I think Apple is that consistent utility that continues to shine. We haven't gotten that euphoric moment. While people compare this to .com, I'm more in the Dan Ives, Tom Lee camp, where I still think this is early innings, AI leading the way. When you get euphoria, you're going to get more IPOs coming to the market. Everything with an AI in their name coming to the market and exploding. We haven't gotten that, but we have gotten a little too far in the Qs. They are above their 50-day moving average, the highest amount this year. Highest amount above the 200-day moving average since last July. And its RSI, the Relative Strength Index, the highest since 2020 after the COVID rebound. So it doesn't mean it's going to end, but we are definitely due for a pause, and then you want to see where it rotates to. I don't think this market is going to fall out of bed. I think the small caps and some of these rate-sensitive stocks are finally going to catch up. I like the financials here. They had a nice run a couple months ago. They've started to fade, and they're going to rebound. Watch July 12th, J.P. Morgan earnings kick us off. And then the home builders, mortgage rates just fell below 7% for the first time since March, and people have a recency bias, and all of a sudden they're going to think, oh, they're falling. Now we can make the move. So that's like the 90s as well.
One of the things that Tom Lee's call depended on was a good inflation numbers, which we got, and then a rally in the 10-year, which we also got. Yep. You think it could go to 4%, but it's at, the technical level is 435, which I think it got through.
We broke, yeah.
So some of these sectors like financials and home builders have not yet reflected where the 10-year is.
Exactly, and that was kind of a head-scratcher last week when we broke down below 4.35. The Russell did not join the party when the NASDAQ and the S&P kept going higher. I think they eventually will. They'll play catch-up. It's 17% off its all-time high back in 2021. It's only up 1% this year. So it's got room to run. And when it runs quickly. Remember the last 2.5 months of last year? It ran over 20% during that time. So when people come to the party, when rates do pull back, I'm not predicting we're going to get more than one cut this year, but the trend has changed. We broke that level. I think we trend back down to 4%, and that will lift the Russell because people are going to look for value as we start the second half of the year.
As this is progressed, we've constantly talked about, well, is the breadth, is the breadth widening? Are we seeing more stocks participate? And a bunch of times we've heard that they were, and that the soldiers were catching up with the generals. But I still don't think they have. I mean, this is all...
Because the generals keep riding further and further.
Yeah, this is all... Yeah, then they take off again. NVIDIA takes off again.